Hello, this is Arvi Ramachandran. I'm a technical analyst over at askSlim, and in this video, we are going to walk through our weekly cycle analysis on Ansys. Ansys is an engineering simulation software company based out in Canonsburg, Pennsylvania. A pretty interesting company and one that not many have heard of. However, they are a really great case for why cycles are really so valuable. So that's why we are going to talk about it here. So for those who are new to our work, at the bottom of the charts, we have our cycle brackets, and cycles are a way for us to track the money flow patterns in and out of a stock. We look for lows to form around the troughs of cycles, which means around this period right here. And once we form those lows, we enter what we would call rising phases. And in rising phases, this is where you would look for money flow to come in and for rallies on the upside. And what you'll see here in Ansys over the past several years, really how clear each of these rising phases have really been. And in the later stages of cycles, this is where there is risk of downside. And what you'll see is in each of these periods here in Ansys, the really clear downside that we've had in each of these periods. So for Ansys, we have a dominant weekly cycle, which is then broken up into minor half cycles. And what I want to do is show you how the dominant and minor cycles really play together and to really make a really clear picture in terms of the overall condition of the underlying stock. So if we look back to early 2019, we rallied when we had these two sets of rising phases. The dominant cycle was rising as well as the minor cycle. And then we had a little bit of a bull flag forming here on the weekly as we formed this minor cycle low. And then once we formed that next minor cycle low and got into the rising phase on that minor cycle rally, we got one more push up. Why? Because this dominant cycle was still rising. And then at the later part of that cycle, once we had two cycles pushing down, we had the sell-off. So you'll see that really clearly even in the following cycle, right? We had two cycles pushing up and the rally, the bull flag that formed on the minor cycle low, and then the rally as we had still two cycles pushing up, right? And then at the end of this cycle that I'm drawing for you, we had two cycles pushing down and you got that sell-off. So this is really a very clear picture and really illustrates in a nice way why cycles are so valuable. So where are we now? Let's go ahead and zoom in. So we had been in this rising phase here on the weekly and are still in a rising phase based on this dominant cycle. We do have this minor cycle low, which is due around the middle part of November. So we would look for a flag to form here in Ansys down into these intermediate term supports, which come in from 336 or so down to 320, and then for a push back on the upside as we enter into this rising phase on the minor cycle and are in this rising phase in the dominant cycle. Now the next key intermediate term low is due 2-1 to 315. So we would look for a pullback and then a rally and then a pullback as we have two cycles pushing down here, and this is where there would be risk for moves on the downside. If you are interested in any of our trial offers, please go ahead and write over to matt@askSlim.com. Also, if you like this video and want to get more of our content, go ahead and hit the like button and sign up for our YouTube channel. We would really appreciate that. And lastly, if you have any comments, go ahead and post those in the comment section on YouTube, and I will go ahead and answer those as well. Thanks again and have a great day.